If you're buying a property in 2025, what can you expect here in Calgary, Alberta, and surrounding areas? There's a few different thought patterns, lots to go over. Let's get into it. So what can you expect in 2025? Well, when it comes to Q1, that's quarter one and quarter two, expect that things probably will still experience that seasonal slowdown we usually have. However, there will be people that are shopping. And I say that because I already know people are on the fence waiting for interest rates to drop again. How much they'll drop? Well, talk to your person that you trust, whether it's your favorite mortgage broker. Listen to the economic forecaster that you trust the most. Maybe it's your agent, maybe it's your financial advisor, but keep your ear to the ground to see what might happen. Guaranteed that as soon as those rates drop enough, you're going to have people making purchasing decisions. And when they do, it won't be just one. If there's less to choose from, and I get that overall inventory will be up more than it's been, again, there won't be as much as there should be and expected to be in the spring months. So you're going to have competition. That's going to mean that prices will stay the same or increase slightly depending on what you're looking for and where it is. We're talking location. So in those first 3 to 6 months, in the winter months of Calgary, there probably will be more competition because buyers will finally be getting off the fence. If you're new to the channel, I'm Jeff Tincher. I'm a realtor here in Calgary, Alberta, Canada. I've been doing it for 14 plus years, and hey, I have a great network across the city and this great nation, even down into the United States of America, and I'm very grateful for it. If you like videos like this, would love to have you subscribe. There's a playlist with more insight and videos that you can peruse at your own leisure. And if you want to get into something more in-depth, there's a Calendly link below. And I'd love to have that 30-minute call with you. If you have some questions about Calgary, you want to know more about the market, you're thinking about moving here, or you've got a property to sell, love to help you out even more. Oh, and make sure that you stick around to the end because there's one particular item that I talk a lot about and think about myself, but maybe not everybody does. I do think it will factor into 2025. A second thing to consider will then be, if you're a seller, what does it cost you to sell now? And we're talking in the first, we'll call it January, February, versus waiting for the spring market when you think you can get more money. If the market's stronger, yeah, you might get more money. But if you list for too high in January or February and try and ride it out, and you think you can get more than the market will bear, you might be right, but chances are it's going to be a bit of a test. And let's just use an example. Let's say your costs on an investment property that you were going to sell and we're waiting till spring, or even your own personal property as a random number were $3,000 a month. If you wait those 2 months, and as opposed to putting it on now, well, okay, you've got $6,000 in costs. Maybe it's 3 months and you're talking $9,000 in costs. For some of you, that's going to be more. For some, it's going to be slightly less. Versus if you're saying, well, I'm not going to get the price that I want compared to what I'll probably get in spring. Well, again, depending on where you are and what it is, what the location is and what the product is that going to offset your costs enough to wait versus selling now for the price that makes sense? If you wait and the market's not better, you're no further ahead at all, and you've waited and lost $9,000 to $10,000 minimum to try and get that property sold. And that's what's happening with a lot of people. They're saying, okay, well, I'll just wait for prices to go up. I'll wait for interest rates to come down because I'm going to get more money. That may be the case, but you also might be in more competition if you wait, which means that you're not necessarily going to have that shiny, beautiful diamond that everybody wants. It's not going to have the only one. There's going to be a few of those. So that's something to consider. We've talked about it on our team. We've talked about it in the real estate industry here. What is your cost to wait? Another thing we're talking about is what will it mean if we continue to see prices stay where they're at and transactions and sales happen as quickly or as commonly as they are. If you look at the data, yes, there technically is more inventory than year over year than there was the previous year. That's expected to increase. But if it doesn't increase more than the amount of sales that we're having, and right now when you look at the data, it's showing that the sales are actually happening quite quickly still within Calgary and surrounding area. And even that uptick in inventory isn't enough to offset pricing and to offset the demand. So you're not going to see prices drop. If that does change, of course you are. Simple supply and demand, those are the economics. But one thing to consider is for anyone that's thinking, oh, well, they're waiting for prices to drop or they're convinced that prices will drop, it is dependent on what community, what part of the city you're in, what surrounding area you're in, what the amenities are, because some of these communities, I will tell you, it's almost like there's a waiting list. People are just lurking. They're waiting for the interest rate to change enough for them to make that jump. They're also waiting for the right product to come up, but they're also in competition by virtue of that with everybody else that wants to be in that area. So I'm always the one to sit here and say, listen, that's great that you want to generalize it, but when you're looking at community specific things, when you're looking at Southwest versus Northwest, when you're looking at Southeast, or depending on what kind of property you want, depending on whether there's schooling there, what the road system is like, the transportation, all those things, yes, there's discrepancies. There are some situations, I'll give it to you, yes, where prices have slightly lowered, but that's because the demand isn't quite there, and or the product isn't as good, or the area isn't as good. So if that's the road you want to go down, sure, have at her and do it and look for those deals. You're also going to, I can probably guarantee you that you're going to be still competing if you're a buyer with developers looking at buying a property, fixing it up completely, and we're talking, well, developers and flippers, and then selling it. That's still happening quite a lot here in Calgary. Yes, the cost of construction and materials is still factoring into that. So if you see that increase again, or if you keep hearing through the grapevine that developers and builders are transferring that down to you as a buyer because their costs are higher, maybe that slows things a bit. Into the first 2 quarters of 2025, it's probably not going to change a lot. So if your strategy is to wait, maybe that's to your benefit. We'll have to wait and see. Another thing that's definitely going to happen is interest rates are going to come down. How much? Well, again, lean on your trusted mortgage advisor, lean on your financial advisor. Get some insight from we as agents that you trust, because every one of us has a great perspective. We all like to work as teams. If the teams are proper, that's who you should be listening to. Follow your gut instinct too. Try not to get in over your head. But how much will we see in terms of an interest rate drop? Probably 0.25 basis points based on what I've heard. Could be 0.5 within the first half of the year. Be more than that. I don't have a crystal ball, but I will say they're going to drop. Yay. But for so many people that are waiting on the fence right now, first of all, you're missing out on some of the great inventory that's hitting the market in today's market. That might not be there when you go to, oh, great, I'm saving 0.5% or a whole basis point. I'm going from 3%, I'm exaggerating, but so 4% to 3%. But maybe the product that you wanted, that you had your eye on, isn't there anymore. So is that something you're willing to risk to wait? On the flip side, no, don't jump in. And we get so many comments about, well, all agents are the same. They're just pushing us to buy. They're just pushing us to sell. Disagree. Because I've always said, if it doesn't fit within your budget and your goals, don't do it. Don't overextend. Take a risk that makes sense to you, but don't just jump into it because everybody else is doing it. This whole panic buying and panic selling thing, it's strange to me. I get it. Again, if you bring it back to simple supply and demand economics and not wanting to miss out on an opportunity, there are going to be opportunities. The choice will be up to you to decide, do I do it now? And when it comes to my plan, is it a 2 or 3 year plan versus my forever home plan? I can't tell you how many times I've had people say, well, this is going to be our forever home. And then 2 years later, a situation changes or something else comes along that they can benefit from, that they like better, and they want to sell their home. So that's great. If you're in a positive equity position, great. Everything works out. If you're not, because you didn't do your homework ahead of time, or you didn't follow the proper advice that made sense, then you're kind of missing the boat. And then you're like, well, I guess, I can't do this now because financially it doesn't make sense. Yes, have a strategy, have a shorter term and a longer term strategy, because the market might not be as good in 6 to 12 months as it is now. The first quarter and second quarter of 2025, you're going to see more people probably buying, those that have been waiting, because it's still a fairly active market. Will it change that much though in the pricing side of things because of the inventory level that's available? That remains to be seen. Another thing that I keep thinking about, that maybe you have been thinking about or have not been thinking about, is what does it mean in Calgary? If I'm coming from a bigger center or from somewhere else, is Calgary where I want to park my family, my money, and those kind of things? Well, the answer is twofold. One, it depends again on what you're looking for in terms of having some financial freedom, having some time freedom. What does that mean for your family? Are you looking for the right community to raise your kids, have the family leisure activities that you've wanted to do that you couldn't do because life was so expensive in another market? The one thing that I think about a lot and talk to my peers about is, What if you are investing in this market? So whether you're a move up buyer and you're doing it for your own personal investment, or it's a flip property, or it's something that you want to make money on in the future, if you're buying something that doesn't have the ability to properly improve it, or you're buying something that's already been done because you don't know as much about the market, it has all the bells and whistles and it's shiny, and you're paying a price that is too much, when you go to sell that in 2 or 3 years, what does that look like? Will the market, if the market's not as strong as it is now, you're probably not going to make much, if anything, on it. Factoring in all of your costs of taxes, your carrying costs, your realtor costs, your lawyer costs, closing costs, and those kind of things, it is something that I do see happen where I've seen flip properties go for great amounts. But 2 years from now, if the market is about the same or it's less, and you can't do anything else to that property, why would you expect that it would go for more? Yes, if the market as a whole has gone up 2 to 3% year over year, maybe you make that. But you have to also remember that as an investor, as somebody who wants to do something positively cash flow, it might be all those things. Think about this. If the carrying cost over those 2 years or 3 years, if it's been more than 3% and you're not going to make more than 3% equity, where does that really get you? I've heard stories about clients who come to me and say, you know what, with X situation, I actually didn't make any money because I didn't improve it enough. So something to consider. As usual, those are my thoughts, not yours. Let me know what you think. Always happy to read the comments and have you in the conversation. I enjoy having you here. Thank you so much for watching.